we're going to talk about regulating the banks.
Let's go.
Now, we all know that the banks are nasty people. They got bailed out, and we have a chant that says, they got bailed out, we got sold out. Well, that's the truth. Okay? Back in 1930, all the banks failed, just like happened in 2008. And we passed the Banking Act of 1933, which was better known as the Glass-Steagall Act. All right? That prohibited the banks from being in the investment banking business and distributing stocks and securities. It prohibited them from being in the insurance business and selling insurance to people. And it also prohibited the banks from being in the stock brokerage business. A lot of the big banks had to split themselves apart. For example, J.P. Morgan became J.P. Morgan the bank and Morgan Stanley the brokerage house. A lot of that went on. Well, also in those days we had regional banking. Banks could only be in one state. You could be a bank in New York or Illinois or in California, but you couldn't be in all of them. Well, in 1999, the end of 1999, we had a bill passed in Congress, signed by Bill Clinton. All I can say is, Bill, why did you do this to us? And that was called, that was a law, I don't recall the name of that particular law, but it was a law that repealed Glass-Steagall and allowed banks to go interstate. And after that we had all kinds of mergers amongst the banks. Little banks got gobbled up by big banks, and big banks got gobbled up by bigger banks until by late 2007-8 we wound up with about 4 monster banks that controlled about 60% of the banking assets in the country. These are the too big to fail banks. My name for them is the too big to manage banks. Okay? Anyway, they were in the investment banking business, they were in the insurance business, they were in the stock brokerage business. For example, Citibank bought Travelers Insurance Company, Bank of America bought Merrill Lynch, and so on and so on and so on. Anyway, lo and behold, in 2008, kaboom, the banks started to fail again. Same thing that happened in 1930. Why? Because we let them go into these speculative businesses. Well, the answer, my friends, my fellow occupiers, is that we have to regulate the banks again. We have to bring back the prohibitions that were in the Glass-Steagall Act, that is, not allow them to be in investment banking, not allow the banks to be in the insurance business, not allow the banks to be in stock brokerage, not allow them to trade in securities or do any other speculative things where a stupid guy who thinks he's a very smart guy because he's the head of a bank can actually undermine the capital of the bank. If one of the big banks were to fail, for example, Bank of America, which I think is probably the most likely to be the first one to go down, if one of the big banks was to fail, it would have a snowball effect on all the other banks. So we are looking at probably another bailout for the banks. Now, in my opinion, that's not going to happen because I don't think the political climate is such that the people would stand again for our government lending all kinds of money to the banks. So that's probably not going to happen again. So we are probably going to see major rolling bank failures. Now, there is a way to circumvent it, and that is to make the banks split up right now. And my suggestion is to divide the country into 6 banking regions and not to let any one bank do business in more than one banking region, and also to not allow them to be in these other businesses. So what would happen is, number one, they would have to spin off their securities businesses, they would have to spin off their insurance businesses, and then they would have to divide themselves up into 6 banks. For example, Bank of America would be 1/6 of its size, and then there would be 5 other banks, different names, and so on, and they'd be operating in different parts of the country. So that is my suggestion. We have to prohibit the banks from being in the speculative businesses. We have to establish 6 regional banking districts. We also have to require banks that are in the mortgage business to be regulated by the state, each state's individual mortgage banking department, because nobody is regulating them now. The controller of the currency is supposed to be regulating the banks, bank mortgages, but they don't. So we have to have the banks regulated by the individual states wherever the property is that they're mortgaging. Then also we have to make the banks subject to the usury laws of the state where their customers are. I mean, you can get a cheaper loan from Tony Soprano than you can from Bank of America. I mean, really. I mean, they're charging people 25% on a credit card, which is just obscene. And then the last proposal I have for banks is that we limit the total compensation of the officers of the banks to no more than 50 times the minimum wage. So that gets rid of these guys who are making $10 and $15 million a year for being incompetently running major banks. And that's my whole idea with the banking system.